Yeah, this is a popular question. Is there's a trend towards remote work or becoming a nomad. So if it is that you leave Canada and you go wherever else, under what conditions or under what are the steps to properly sever tax residence with Canada if possible?
That's it's a loaded question, actually, especially when we look at the nomads right now. People working outside of Canada. Now they're actually working outside of Canada, but they're employed by the Canadian company. So all of a sudden, you do fall within the employment standards and where the service is being provided along those lines. Now, from what I understand, is they are looking into the remote work locations, and they've come up with certain rules, but it's still up in the air. It's a gray area that people are considering what has to be done. But to put it in general perspective, the way for personal taxes or for filing the taxes, either you're a resident, Canadian resident, or a non-resident. If you're a non-resident, then you're going to be taxed only on the services and the earnings that you have in Canada. It's not on the worldwide income, but if you're a resident, then it becomes the worldwide income. One of the thoughts that they are having is saying that the way they want to look at it is based on your residency, because Canada, based on your residency, if you're a Canadian resident, then you'd be paying taxes no matter which part of the world that you're working in. That's one of the things that's coming out. So, Cole, any additional insights you do?
Sure, Vala. So I would like to add that there are, again, certain factors which we read as tiebreaker rules. And one of the most important one is the residential status, not the tax residential status, but the other residency. If the person is a permanent resident of Canada or a citizen of Canada, then their income, they have to, report a worldwide income in Canada. Yes, there could be some potential, areas where a person who wants to see where the tax residency can look at. One of them is has to, the CRA is going to evaluate where the person has stronger ties in terms of, say, banking relationships, in terms of his or her family, in terms of where the employment is. So even if the employment is within Canada, but the person is physically living outside of Canada, purely from a salary earning perspective, we can say that, the salary becomes, say the person moves out of Canada to some other location, say in the US, hypothetically. So that person living in the US would get taxed under the treaty. The tax would be in the US, but under the Canadian domestic regulations, the person would get taxed in Canada as well on his or her worldwide income. So you have to be really clear on the ties that you are in a position to break. More specifically, renouncing your Canadian PR or a citizenship. Because if your ties are still with Canada, it will be very difficult, because a lot of people actually come with this question, specifically moving to tax-free countries in the Middle East when they moved there. So this question has come up in the past as well, and I would strongly advise that your specific situation has to be looked at and see how connected you are with Canada and how we can, potentially break those ties so that you become a non-resident, a tax non-resident in Canada.
Just to add a couple of things is also that when we're talking about trying to make a clean break is key. So if you have a bank account here, and if you have your family and you have all your community here, then it's kind of difficult to explain that it's going to be a clean break kind of thing. That's one of the things to consider. Now, what some of the employers have also done is within Canada itself, they've limited the employees working out of the province, and that is also for tax purposes, because your deductions in the different provinces change at the provincial tax level. So that's one of the reasons. So they will be looking into that very closely.
Thank you for that. So, in other words, it's not really a black and white issue. You need to look at the specific fact pattern. And basically, what you're saying is the more you have, I guess it's almost like a center of life test, like in the European countries. So the more ties, economic, personal, that you have, community that you still maintain with Canada, the greater the chances you'll still be a tax resident. And the more that you can sever and, basically scorched earth, cut everything off and become a bona fide resident of somewhere else, then that strengthens the case. And of course, if it is that you are one of those perpetual nomads, people keep moving, then you can't be a bona fide resident of anywhere else. So therefore, the fallback rule would be you're still Canadian tax resident, potentially.
And if you're staying in Canada for over 183 days, then you're deemed to be a Canadian resident anyways.
Okay. All right, great. Thank you for that, gentlemen.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.